because it is positive on the 1 hour, it is positive on the 4. So it will support on the top of a 1, and in order to make a correct entry, we would adhere to the internal pivot levels. So this is the 1 hour chart on Ethereum. It is positive. Okay, it has a long time to remain contained below overbought. So someone may consider this is not really a very strong momentum plot. It is below overbought. Yes, it is below. It can go on being below overbought until the end of the week. And this cycle, all right, that you're seeing here, did a 4A, and it's going to be doing a 4B and a 4C and a 4D and a 4E, just between every day's pivot levels and first support level and the market high, and even moving a bit higher, 127.2% above the market high. And if we just want to do a swing trade by buying the top of a 1 and holding that trade until it goes to 161.8, we get just stuck into that trade. We'll make money at the end of the month, maybe we'll make money next month, but it is just not efficient and not sufficient for what we would want to expect in terms of usable profit, all right, for our accounts. Okay, so we have to really incorporate what the cycle structure is doing, identify the extent of that retraction, and realize that is only contained at the internal necklines, which are the pivots and S1, so long as we're seeing positive momentum on the 1 hour and 4 hours. Any positive momentum on the 1 hour will do. All right, you become very efficient if you just shorten your profit targets. Okay, so right now Ethereum is a buy, Bitcoin is a buy, both are buys. So someone may consider, well, the market is going to strike very high, I want to get into the market as quickly as possible. Not really, because you're seeing negative momentum on that 15-minute chart. You're going to be testing this is Ethereum now, we're starting with Ethereum, you're going to be testing 3065 again and again. No, it will move higher, but you have 36 hours to do that trade. This is now what is also meant by efficiency. You do not intend, really, this is now a 5-minute chart. You see this negative momentum is about to do zero line rejection. This can even go 127.2% below the bottom. We now understand this. We don't panic. We understand why it is going 127.2%, because it is still doing a zero line rejection, and because on the 15-minute chart the momentum is negative. You have two internal smaller negative momentum cycles, and they will just impact the market between the pivot level and the S1 level. That's all. Okay, so this is the pivot level, this is the S1 level, this is just a 5-minute chart. They deviate a bit when you go to the 15 minutes, but this can reject at the pivot and go down to 3028. So we buy 3028. We buy 3030, because on this kind of negative momentum on the 5 minutes, we're going to get 3030. We're now going to take profits at R1, which is going to be 3223, and the difference in the money between 3060 and 3030 is another $30. So why buy in early if we see negative internal momentum on the 5 minutes and even on the 1? We don't have negative on the 1, but anyway, we still have negative on the 5. Now we all understand also that once we get that 5-minute chart positive, degree 1 positive at least, then yes, this is an Elliott structure. That very small structure that we're seeing here is an Elliott structure. And yes, we are seeing inverted head and shoulders, head, shoulder to the left, shoulder to the right. Then we can expect to buy the market to that small level that we want to go to, R1, 3221, all right, with a stop just, if you wish, just below the head, because you know that the cycles have reversed. Short term are becoming positive, 5 minutes is becoming positive, 1 minute is already positive, and you know that both of these cycles now, 1 minute is positive, 5 minutes is positive, 15 minutes is negative, but all of these smaller cycles are supported on a positive 1 hour chart momentum wise and on a 4-hour momentum plot. Okay, so the market becomes a goal, and in order to build in efficiency, we would want to try and adhere to these very strongly, these conditions or these parameters very strongly, also founded on a risk projection matrix and a risk management or a money management matrix. whatever you wish to call it. All right, so now we understand the market is a buy. This is for Ethereum. Let's take a look at the longer projections, just in case this is the same plot that we're looking at. Now I hope we want to understand what is condition A and what is condition B. We will keep showing on, we're usually now preparing a specific PDF just for all trending issues. So we'll always start with trending issues, we'll always monitor the trending issues, and we'll always keep showing the degree of the trend, the entries on the 15-minute chart. All right, so that we do not all miss out. All right, so suppose you are not really into short-term trading and you would really want to go for something more lucrative, higher, all right away. Okay, so of course we're having degree 3 positive momentum on the 1 hour. We're having the degree 3, same degree 3 on the 4 hours. What we're looking at here is that we are now confirmed that Ethereum has broken out above this internal cycle here in level 1. This is an A, this is an B. There's going to be a C. All right, so that C, in the worst case scenario, if this is going to be a bearish market, this C is going to do a 5-wave swing. It's going to be a level 4. It's going to reject at level 1. That level 1, we're not showing it here on the 4-hour chart, but actually is around $3,800. All right, even maybe 3,850. So we don't have to think about it now. What we are confirmed, which is very important and very useful for our trading, is that a level C, this C, you can see an A in red and a B in red. We have it labeled 1, 2, and AB. That C is 5 swings, and it will observe an Elliott structure. That's why we can implement what we're doing on the 15-minute chart. That's why we can always buy these internal P and internal S1 on a 15-minute chart, because what we're into actually is a degree C structure, which is a 5-wave Elliott swing. All right, you're even into degree 3 of that Elliott swing, some kind of an internal degree 3 to take you to that neckline. Okay, so swing traders or position traders, we have here position trades. Okay, swing traders can take would probably, our advice to take profit at 3,500. We're gonna take out, we have something like an intermediate neckline here between the two necklines. There's a high degree neckline here and that neckline below it. 50% between the two neckline comes in at 3,400, 3,371. 100% of the real neckline actually comes in at 3,600. You can see it here, and the breakout levels for the current week that we're in between the 7th of February and the 11th of February, which was Friday, is 3,598. So it's realistic for swing traders and position traders to hold to 3,598. If we don't see that level by the end of the week, at least we get to see 3,394, we close there. At least we get maybe to see 3,500, 3,496, we also close there. We do not expect to see a shoulder until we at least attain 50% between the two necklines. 50% is 3,400, over which is the fluctuation high for the week, 3,394. All right, we're still way to go there. All right, remember we are looking at right now 3,103. So there's still a long way to go. You're looking at around $200 or even $300. If you're going to 3,394, it's almost 3,400. So it's another $300. And that is just the swing trade. Again, we do not expect a shoulder seriously until we get to 50%. For swing traders, you could just hold. The move higher would be sudden. All right, it requires patience and a set and forget mentality. It requires the actual internals could burst out very quickly at some point. And we're labeling the Bitcoin chart. We showed that internals are extending. So if they're extending on Bitcoin, I would believe they're also extending on Ethereum. Swing term, you can just let that run.